Hello everyone, this is Juan Sarmiento and today is Friday, August the 27th. Okay, I just had a mistake in my program. Uh, there was a glitch there and my recording was wasted, so I'm recording the show again, so to speak. So I have already, as you can see, filled some of my orders. So what I'm going to do is going to go through them again. But keep in mind that I have filled them. Okay, so first of all, let me just show you my trades. I did look at some trades to enter some possibilities, but I was unable to find anything interesting. And I just need to mention that there are MPC, PANW, and NVIDIA. So you know I have been looking at potential trades. It's just none of them really fit my conditions, so I have to give them up, unfortunately. But I just want you to know that I'm looking for them. If they don't come, they don't come. I have to let them go, otherwise I'm risking a bad result. Okay, that's all. Here are all my trades, current positions, and you can recognize them. But I have selected the ones that needed some action. And let's start with Adobe here. You can see that I already filled a trade on it, so let's analyze that. And as you can see, it's just a profit-taking move is like essentially selling the long call that I had and buying a higher strike price. Let's go to Adobe here on the account statement, and you can see what I have done all along. Started with a trade here and then roll it up from 590 to 630, and then from 630 to 660 today, and that's the resulting trade. So this selling of the 630 in favor of the 660 is a profit-taking move. If I were to reverse this trade, you would see what it was like before. Okay, so this is what the trade looked like, delta of 26, and by doing this sell, I have reduced my deltas to 8.4, and that's a profit-taking move. Okay, it's called a roll-up. Okay, so as you go along, look, you still have this trade that looks like a straddle, so a big move in either direction will be great. A small move in either direction will be a little profit. All right, let's move on to DHR. In this case, I had assigned shares, and that's going to be a little harder to explain. Let's go over here. You can see DHR. Let's reproduce what we have by analyzing the opposite of the trade that got filled, and then I can show you why I did what I did. Okay, so you can hide the simulation, hide the position, and then you can pretend that this is the actual trade. Okay, so we had an assignment. What that is your short call got assigned into shares, so you end up with negative shares. Okay, and because I had the short calls expiring next week, I got assigned and end up with shares. Okay, so I can't see which one it was, but I presume that it was the September the 3rd. So when you get assigned, you should call your broker tell them that because you have this long call expiring in September, you always have outstanding calls. There is always a matching long call to your short call, in at least in the price, and not the expiration. The expiration of the long call would be further out, and it has some intrinsic value, time value, extrinsic value, that is. And so what you want your broker to know is that you want a trade like this, a covered call in which you're selling your call and buying back those shares. So we are going to do the opposite, analyze the opposite. So this alone looks like this, okay? It's a negative risk, unlimited to the downside, because you have the short shares, but your broker doesn't like those there because you have an IRA account, or perhaps because they cost too much. So, and then you have a margin call. Well, if you tell your broker that every time that happens, you will have a call matching it, tell them to do this, to buy back your shares and sell your call, and then it actually is close to a break even. It's more than a break even because that call has some value. So instead of costing me $260, even though the stock is trading at $320, I'm actually buying it back for $58.97, even though I got assigned $260. All right, so I'm paying less than what I sold it for, and that closes your position. And as you can tell, I already have that filled as $258.97. That's almost $1, $1.03 profit for me, or credit for my account. Okay, so we took care of that. We also have this vertical spread. What happened here was, as we went up and up and up on the roll up, we ended up buying 310 call, okay, while I was selling those 260 outstanding calls. So I had the 310, and on top of that, I sold an additional call, and that created a vertical spread like this, okay. And right now it was profitable, so I'm just closing it to take credit, and then I end up with just the put, and the put could be sold as well, and I did just that, sold the put as well here. All right, and that created a profit in general, closing the trade completely. I'm just got a bunch of credit that I could use to use in making other trades. Okay, so at some point you close it and move on. Okay, CarMax. Okay, CarMax. Let me see what I have. It's still processing. I'm intending to close this trade. Okay, you can go to the account statement and you see what the original trade was plus a rollover. So let's analyze that. And hide the position, and this is what the trade looks like. It's a loser, and the shorts expire next week. So I say, well, at this point I don't want to lose any more money. I don't want to expand my losses, so I'm going to close it. Okay, and this is where it is right now, waiting to fill. Let's change this. Okay, I'm asking too much of a credit. I just want to get out of it, and I just want to make sure that I give up a few cents in order to close the trade. Okay, if that doesn't fill, then you go further down, less and less credit until it gets filled. Okay, we'll wait a little while because that takes a few minutes. Okay, let's go to MS. MS, as you can see, I got one call sold. Let's analyze that. Okay. Okay. And this is the trade as I had it just before this sold happened. And you can see that I have delta 77.8, and I just want to take profits. The stock is hitting new highs, and I don't think it would be helpful to have that into next week. So let's sell that call, and that's what I did. Just sell one of the possible 4 outstanding calls. You can see that I have 4 long calls, 8 long calls, 4 short calls. The difference of 4 calls is the outstanding calls, of which I'm selling 1. And doing that reduces my delta risk, and the stock moving in either direction becomes profitable, and it got filled, as you can see. I'm gonna analyze trade right now so I can see exactly where I am, and this is the current position with a 59 cents delta. It's neutralized, and that's a way to take profits. Let's go to Yum, and in the case of Yum, I'm doing a rollover. You can see where it is. Since my original rollover, it's lost a little bit. It was like $54 loss, and now it's increased a little bit. I'm gonna say, okay, I'm gonna roll it over, and hopefully these 2 trades will fill before the end of the day. I'm not gonna bother you with that. Just rest assured that I will reduce my price until it gets filled. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.